Good evening, everybody. Welcome to the Lock in Your Success trade and market updates for August 19th, 2012. As we were saying last week, let's take a look at the SPX. We more or less expected the SPX to come up into previous highs, which is up in here, so this move in general is no surprise. The way it got there is a bit of a surprise for me. I figured that we'd probably have a capitulation up to here, and then we'd back down, or we'd back down and then shoot back up here. So this move is interesting. It's just a slow, grinding, low volume move up to our resistance area. Normally when this happens, we are going to get a breakout. We're still waiting for that high volume break up, which usually indicates a capitulation before a market reversal, and I have not seen this. So what I would say here is our most likely move from here is possibly either the continued grind up a little bit higher into this zone, or we pull back a little bit and shoot higher. Either way, I think we're shooting a little bit higher. I think we're going to exceed this high here, and where the market goes from there is anybody's guess. I don't have an opinion at this. This should have dropped back and shot up, indicating a break higher, a breakout, or shot up and then failed, creating a bull trap, failing, and then coming back. Neither of those moves happened. We got the continued grind. So we're still looking for a capitulation move. We're looking for a blow off to the upside, and that doesn't mean we're bullish. That doesn't mean we're going up. That because that a lot of the time is just nothing but a bull trap, and then we'll pull back hard. So what we're gonna have to do is wait to see this break forward. And how it breaks there may be different. If we back off and then break, we're probably going higher. If we simply just continue the grind and break higher, that very well could be a bull trap, and we don't know. We just have to wait. I certainly wouldn't go bullish until we see a retest and then a blast back up again. So that's kind of where I stand with the SPX. Another thing is, if we look at the market timing with our other indices, the SPX is at its yearly highs or really close to it. The NDX still has a little bit more to go, which tells me the SPX is going to push a little higher. The Dow still has a little bit more than the SPX to go, so again tells me we're going to push a little bit higher. And if we come back to the Russell, this is just a nice little cup here, and yes, we are at resistance, but again, I think we're pushing a little bit higher, possibly up to this high here. If we have a false breakout, we're going to shoot up to about 830, and that's what I have for direction. It's a really tough call here. We are at resistance level. The market certainly could back down, but with these very low volume grinding moves in 3 of the indices, and you get the rut here overperforming, just trying to catch up. With that going on, I have to lean a little bit towards the bulls for now until we see that breakout, and then it's anybody's guess. So that's kind of my opinion. Let's take a look at our trades. Earlier in the week, I opened the September M3 trade. I also closed the August, which we'll talk about in a moment. But for the September M3 trade, the market was down in this range here. I believe it was around high 790s. I went ahead and purchased 5 770 put butterflies. I would have, because of the market skews right now and the low volatility, we have unfavorable market conditions. We pay, and I'm a little late for entry too, and we paid $13.15 for those butterflies. We have 5 butterflies, and I was going to have 10 IWM calls to be able to control my gamma trend with my 5 butterflies. So since I was going to have 10 IWM calls, I just jumped up and did a single Russell call. A little bit later in the trade, the market started pushing up, I kind of like that. It was this day here. It's a blow-off day I've been kind of waiting for, which I thought might have been a blow-off day. It was really starting to go earlier in the day. It was coming up. I thought this might be the day I've been waiting for with the blow-off. So I came in and I went ahead and I just double-sized this. And I have it going on with a 10 lot. If the market acts up too much, I'll drop back down to a 5 lot. Because actually this account in particular does not have $50,000 in it. It doesn't have enough planned capital to trade this size. So if it gives me too much trouble, I'll have to drop the size back. That's the good thing about the M3 trade. Sometimes you can overdo your trade size can actually be more than your planned capital, because there are a lot of nice capital reduction techniques that you can use to keep your capital down if you'd like to. And this is a trade you can also modify your maximum loss in. I mean, if I don't want to take a 10% maximum loss, I can normally, cut it down to 7 or 5, and I can normally get away with it and still have a favorable trade. So that's one of the things I really love about this trade in particular. Also, like I said, I can always cut my size back if we need to. But here we are. This T+0 line, by the way, is incorrect. It's after hours. I'm actually sitting up here. I am negative delta. Should the price come down to 790, this trade should be up about $1,200. And should we continue up, this trade should go down to about minus $700, I guess, if we start pushing up again. Let's see, this current P&L looks about right. So here we sit, and I'm at a $5,000 profit target, $5,000 max loss. Realistically, I should be reducing my profit targets because we are doubling up on calls to get our gamma trend straightened out. Difficult conditions for this type of trade, because ultimately we're making our monies on the gain in the butterflies, and the butterflies are fairly expensive. So that is the September trade. If you remember with the August trade, I think I can get the expiration graph up. Let me look at that, if I can do that. Okay, this is what the expiration graph looks like on the trade before it was closed. If you remember, we were initially in, let's see, this position here. Let's take a look. In this position here, which was a very safe position actually. The market was down in this range. The trade had a good chance to make money if we pulled back. We weren't going to hit our profit target. We pretty much had to vertical out on it because that run up towards the end of expiration kind of gave us a little bit of trouble. Now, and this is what the M3 trade is designed to do, right? If we get this continued up move into expiration, typically you're not going to make a whole lot of money. You may make something, but you just end up verticaling the trade until you just take all your risk away. And had we held this position, we would have been able to stick a few more verticals in here and just go to expiration on this thing, and I would tend to guess we would probably have made about $500 total, right around that, had we stayed along this path to do this. And at some point during the week, I think I did post it on a website, I decided to go ahead and reposition. Something I shouldn't have done. It's really outside the M3, because what I'm supposed to do with the M3 is just continue to vertical out, take my very small win, my very small loss, and move on to the next month, and not take on a lot of risk. As we were moving around in here, I was having a nice rise here in a T+0 line. I could have certainly added some verticals in here. I could have brought this to probably at least a few $100 profit and expired it. And I would have done it relatively safely, because realistically, had the market really shot up, it wouldn't have been a problem, and we could have come all the way back probably to, even if with the extra verticals, to 780 without too much of an issue. So that would have been a nice, safe way to deal with it. What I did, however, is I came in here and I sold off 750, bought two 790s, sold a put vertical, and bought back some of the calls to take off my downside risk and keep my capitals within limits. And I ended up in a risk graph position like this. And while that was a perfectly fine position, it took on more risk than I should have. In other words, we were down at 790. Had we had a significant down move, I would have been toast with this thing. A big overnight gap to the downside. And not that there's anything wrong with that. If you're doing weekly trades with that kind of capital, and you don't mind taking the $13,000 loss if the market goes against you, then that's perfectly fine. But that's not what we were in this trade for. In addition, I took on all this additional upside risk, which was is not terrible. Realistically, we could have, if I held the position and let it expire, we could have closed all the way up here, still within our max loss limits or really close to them. So that wouldn't necessarily have been a problem too much, but the downside risk was more than I should have taken on. I thought that was irresponsible, so I just decided to close the trade out the following day. And since I just wanted to be out, it was towards the end of the day. I kind of got beat up on execution a little bit. I should have closed this for about up $100 a contract. I closed it for about up $20 a contract. So we ended up making a little bit of money here for our trouble. After commissions, I think it was like $100. Almost not worth it. Definitely would have been better off to stay in the other position. But the good thing about this trade is usually when it goes bad, you really don't lose a whole lot of money if you're staying with the concept. Or a lot of times you'll make money or break even. So I'm perfectly happy with that. We did well. I know a lot of traders that trade this actually hit profit target this week. And if you have the sense to pull it off at half profit target, again, they did really well. I had a lot of traders do half profit target. And worst case scenario, you should have broken even on this. If you happen to lose, then you should be talking to me and figuring out why if you're one of my clients. Otherwise, we'll just move on to the next month. Let's take a look at the September bearish butterfly. Okay, here's the September bearish butterfly. This has been sitting in the same relative position for quite some time. If you remember right, I had the Friday we were supposed to enter this thing. I decided to enter it in the morning instead of the afternoon, because I didn't really think I'd be around in the afternoon, and I wanted to get in. So I entered it in the morning, and of course that just happened to be a really large up day. So what I ended up doing is I hit a delta theta ratio problem the very first day, which is just another indication the markets are terribly skewed and it's not really good market conditions for this. Ended up rolling up the position. Later on, I did hit my add point, and I added my 800 butterfly in here. And then earlier in the week, this week, I hit a delta theta ratio, 1.5 to 1 delta theta ratio problem. So I went ahead and rolled the 780 up to 820. So here we sit in a 800 820 pair of and when I added the 820, I put a call butterfly instead of a put butterfly in. And I could have done either one. I was really kind of at the money, but the 820 was a little bit out of the money at that point. The calls were a little bit out of the money. So I went ahead and did a call butterfly, paid $22 for it, which is completely outrageous. If the market continues up, it is probably going to put us over our planned capital for the month, which we had the same problem in July. It's the same type of thing. So August, however, was very good. If you remember, August was an excellent month. We stayed within capital limits. We had full profit target, which is excellent. And July was. We're going to go over July on SMB's Options Tribe on Tuesday, so stay tuned for that. Make sure you go ahead and take a look at that. Well, we're either going to go over July's trade, or we're going to we may go over a modified version of the trade. We'll see what the participants want to do that day. Okay. Anyway, so this is this trade. It is down $310, which is no big deal at all. The market's overextended. If we currently have an add point of 820, which we haven't quite closed over yet. We closed over 820. We are scheduled to stick in an 840 butterfly, and we will be doing that, assuming I'm home. I may not be home Monday. I might be out doing some other stuff, so the 840 may not actually get on. But in general, if we get over if we close over, or it looks like we're going to close over 820, we should put this 840 on. If the market's up, we'll either do it Monday or Tuesday. And that's that trade. So this is going fine. It's like I said, these are not good market conditions in general for butterflies with the extreme low volatility and grinding up market, but we can do okay. And I believe that is everything. Once again, I'll be on Options Tribe. I will put the link to the Options Tribe on in the description, and I hope that you tune in, listen to that, because it'll be a really interesting meeting. And otherwise, I'll keep you updated with any changes, and have a great week, everybody. We'll talk to you soon. Good night.